Good morning, all. Camelback Trading 2724 coming to you this Friday morning, May 1st, as we start another month. We're looking at the market profile of the SPY ETF. Have it spread out a little bit. Just want to go over a couple of things. However, we are starting the month of May with a downside gap. This is going to make 47 gaps out of 84 trading days this year. It's utterly amazing. Talk about mindless machines and algos gone wild. Let's go back to, here's Monday. We're right back to the scene of the crime almost. Remember last Friday I said, right, we were forming a B shape and then all of a sudden price just started going up. Right? I'm like, wow, I don't like that structure. Well, it doesn't matter what I like, because then we gapped higher Monday and held it. Gapped higher Tuesday, filled it. Gapped higher Wednesday, filled it. Yesterday, opened, sellers kept pushing, and then what happened again? L&M, especially M, I said, price just does what it wants to do. That's why I stay away from M period. And now here we are, gapping lower into the gap from Monday. Right back to where we were. So let's go over destinations and a game plan for this morning. So right now on the upside, your first destination would be the pre-market high of 285.40. Then it would be yesterday's low of 288.59. Then the 10 wide, which was going to be a downside destination, is now an upside destination at 289.68. Then 292.24 daily high, and 294.88 is a monthly high now for April, and a poor high. So we have a poor high for a monthly high. Doesn't happen that often. For the downside, well, right now, we're not going to use yesterday's low. We're not using, actually, there's another 10 wide, 287.46 on the upside now. That's pretty, that's interesting. This 10 wide was gapped over on Wednesday and now being gapped below on Friday. So it's still a naked POC from two gaps. Very interesting. It is 10 wide. I would think at some point, depending on how strong these sellers are, we may get to it, right? Now, I'm going to use, since we still have just over an hour to go, 285.40, which is the 28th low. Yes, we're below it by $1, but we still have an hour. Then 284.62, and then filling the gap at 283.70, a 92-point gap from the 27th. Below that, if you fill it, remember, we had the price probe and a price spike on that on that rip up on Friday afternoon. 282.93 is the price probe, L's high. 281.56 is the price spike, which is I's high. And then below that, we don't have anything to that daily low of 278.50, which coincidentally puts us right on above the trend line on the monthly for the last 11 years. It's amazing how we keep recycling to these numbers, that 287 level, back and forth, above and below it. Okay, game plan for this morning. Well, this gap, again, is going to be pretty sizable, right? Yesterday's low is 288.59. We're trading at 284.23. It's over $4. So, do I want to short it down here? I do not, right? I'd look for an inventory adjustment. I'd look to get the pre-market high. I'd look to get 11 wide. Those things, that nature, to take a short if we were to get an inventory adjustment. Do I want to be a buyer? Well, again, lower value, gap lower. Do you really want to be a buyer? No. However, you do have the gap here you could lean on. So if we're trading at 284.30 and that gap gets filled at 283.70, 60 cents worth of heat, right? If the gap fills, you get out. Or do you want to wait until the price probe? That's 282.93. It's another dollar lower. Again, I wouldn't be taking a buy because I think the market's good. I'd be taking it for two reasons. One, you have this gap for now to lean on, and two, maybe for an inventory adjustment. I would not stay married to a long play, but those are the reasons I would take one if I did. Again, short play down here, I would not. If we are to come up, get the pre-market high, get back to this park that has not been trading at, then possibly I'd take a short there, because then you know you're out and your risk is a lot less, right? From the park to yesterday's low. Is the market that this week? Well, we'll see. Who we're trading against today is going to decide whether we do have a chance of getting up to this park and filling the gap, or whether we're going to close this gap, not look back, and keep going. If it's short-term traders, then they may just start looking for very visual areas, which is this gap, maybe the price probe and price spike, and then they let up, and that's all they want. If it's the big boys, they'll blow right through this, right? Now, volume pre-market for a move down 2% is pretty horrible. It's only 1.3 million right now. Yes, I think we did 5 million. So right off the bat, early on, is telling you that it is just short-term traders puking out week longs because they don't like what they saw in Apple, Amazon, and whatever other stocks earnings came out last night. So that is something to keep in mind. That's another reason I would not short it right away down here. Okay? So let's go over to the charts. So it's a new month. It's an inside month. Last month's high again, poor high, right? 294.88. Right now we're trading at 284.40. So we're $10 below the monthly high. We're $40 above the monthly low. So there is a very good chance we can trade inside the inside month for a while. So the important thing right now then becomes that 278 line, right? I think that's the important thing to decide whether we come out of the inside month to the upside or the downside, if we come out of it at all this month. You stay above it, buyers are going to have the upper hand to here. You get below it, sellers are going to start getting the upper hand. Something to keep an eye on. Weekly, one time framing up, it'll be 6 weeks this week, right? Unless we really flush out down to 272 today, and I don't think we will have one time framing up for 6 weeks. However, look what happened here. Inside week, we came out of it. Monday, Tuesday failed. Wednesday, Thursday stayed above it. And now today, back into it. For now, we had a triple top here basically, right? The high of it was 288.52. Well, if we ought to close below that, and if we close below 287.30, well, yes, we're one time framing up. However, we're back in where the triple top was, and look at the excess we might be leaving on the upside and below the 287. So a bit of a double-edged sword there. Yes, we're one time framing up, but they did give back a lot late in the week. Daily, we went from up to balance yesterday. Now, even though we're gapping lower, right? Remember I said yesterday, if we take out yesterday's low, well, bottom of the balance is 284.62. We're trading there right now. So balance rules will apply, right? If we get to the bottom of this balance, we'll see if that low holds, if this gap holds, do we just slightly extend it, fill the gap, and come right back into the 4-day balance? It's another reason I don't want to short this on the opening. It's going to be the bottom of a 4-day balance right above a gap. Okay, so I do not want to short it. Again, you can take the call play based on what I said, but it's going to be lower value and the indices are all going to be down pretty big, so you have to know you're out. So again, we're going to have to figure out who we're trading against. Right now, it's definitely short-term traders. It does not mean we can't bring in longer-term money if we get some acceleration and buyers don't come into play to take this back up. Have a great day trading. Good luck. I'll recap the day and the week at 4 p.m. and come check us out at camelbacktrading.org.